Okay, so good morning, everybody. We are now doing the monthly, quarterly, weekly update after the weekly, monthly close and quarterly close on last Friday. So it's an important one because it could give us some insights about the next big things we can expect. For the people who are on live, in the live update, you can ask question inside the chat room, and then I will answer after ending the recording. So let's start with the DXY. It will be mostly the same on the other side, but we start with the DXY. So concerning DXY, we have several options, and either in Euro USD or in DXY, we will have two scenarios. One scenario would be a continuation of the actual move, and we have some level on the downside on Euro USD and on upside on DXY. And the other scenario would be that we have a sorry, I will stop the sound so we don't have this music. So the other scenario would be that we have bottom on the Euro USD and topped on the DXY more or less. I mean, a few pips up can still be possible. And in that case, we would be inside end of year reversal, which is the period where usually we see them. So that's one important thing, the timing. As you see on Euro USD, we have a very precise timing with the London Open, the London +5, and then the time channel. So it's the same on the big time frame, and especially on the quarterly. If you look on other years, you will see that in many occasions, not always, of course, we have the last quarter can show a big reversal that would last till end of December or beginning of January. Okay, so this is the first view. We will see here, you have here the retracement, the all-time retracement, and you see we are not far from this 38.2 here. This is Heikin-Achi candle, so that means nothing in that case. So we will see that with the regular candle, it will be easier. So we are arriving to the 50%. We have up there the 50% and there the 38.2, which is the two big things we can look at from the retracement point of view. The most important there is not the retracement for me, is the ABC, which is the extension fib we use. If you use TradingView, you can find them here as trend-based fib extension. So this one is the yearly view. I will show you three of them, the monthly, the weekly, and the yearly. The weekly is just helping to have something more accurate, and then the monthly and the yearly are the two different scenarios we could have. So concerning the yearly, it's this one and this monthly. You see the monthly is coming from less deep, is measuring this move, and the yearly is measuring that move. You can see that on a smaller time frame, like this one, for example. So in black is the yearly, in orange is the monthly starting here. So in those two cases, we have touch here the 78.6, 76.40 of that ABC up yearly. That's potential ABC up yearly. And we see that even this 50% here has been the open and close on the quarterly base of last quarter. So it's showing us we have some good accuracy from this ABC. Here, same thing, we have topped right on the 38.2. So several things, even this consolidation on the 2360 is telling us this ABC is not invalid at all. So it has some accuracy, and that's how we confirm it. So we have those two one. On the yearly, as I said, 76.40, 78.6 fib on the upside. And you see we had a close way below them. So that's good because we didn't close above it. If we would have closed above it, then we would open automatically to the 100% extension at 121.37, which is still a potential scenario. So that's why I said we have two options in all what we will discuss today is continuation globally up to this 121.37 extension there. If we really break and close on a big time frame like weekly or monthly above those levels, then we look for this one. If we don't, if we only spike, for example, even if we spike to this monthly here at the 127 extension, and then we come back for a weekly close and the monthly close under this, then we don't run for this one. So this is the two scenario we have. The scenario I'm more looking at actually is we retrace here. Why? Because of the period, as I said, the fourth quarter of the year. And second is because of what we have here, which is this huge long-term from 2009 long-term channel or wedge, whatever we call it. We stopped right on it. We had some extension here. We had some fib and some the 1 to 72 extension, which is the same of the one I will show you in a few minutes, the weekly ABC up. This is the monthly ABC up, and we have a weekly too, which is coming there. So this is why with the time period of the year, this channel which is here, so we could well go there and touch again this area. That's why I said we could still look little bit higher, but I'm not convinced now that we would go to this level here at 121.16 to 123 more or less. I don't think we will go there. So that's my view. Still possible inside the quarter. We push a little bit, and then we will go to this 1140 or 1 to 72 extension. We will go in detail on that. But that's one other big reason why I am looking for a turn here, due to the fact that at this level, since a long time, we have already a very bearish setup on the indicator. So technically, we have a lot of confluence of information that would confirm the scenario one, which is the one I just spoke about, is valid here. But I always stay open-minded because we have to be careful, especially with the actual scenario, I mean, the actual geopolitical context, which is very crazy. So normally we should pull back. And if we pull back, the area I'm looking at is this area here where we have this zone, which is the top over there, which is inside this spike there. So this is a rectangle where I would look for a pullback inside this quarter. Perhaps, as I said, we could come back a little bit, but mostly the idea of this move would be to pull back to there. So that is what I'm looking at. And then we would go up and probably look lower inside another test of this bottom channel in that 99 or 100 area, which would be, by the way, the bottom of that top there. So we would have here another possibility, which would be the extension of that, but that would be for next year, not now. So we would probably go there and then meet here, and there we would have two options, or we go up and keep on up, but then we would check with our tools, or we would break here after touching here, not directly, of course. We would break and then see another scenario, but that's for 2023. We are not there yet. So for 2022, what I am expecting for the end of the year is this move. Of course, the scenario 2 would be that we would, for any reason, find more traction on the upside and then break up in this area after retracing. As I said, that's not my favorite one, but it's something I am looking at the same time. So that's the two options we have. And that's why now I am shorting the USD whenever I can. So I am long Euro USD whenever it's possible, with the setup and confirmation on the 5-15 minutes. So that's where we are. Concerning the weekly, just to finish with it. So this weekly is very interesting because it's giving us So why did it disappear? So probably because I didn't, okay. So I will extend this on the right. Okay, so this weekly is very interesting because we touch to the PIP the 1 to 72 extension of that weekly here. So it's interesting for this reason. And you see that even this morning since the open and before, we have been playing with this ABC up, and we are now back under the 100% extension. So the next important area to look at on that ABC here would be there with the 78.6, 76.40, and then of course we would go lower with those levels. So that's where we could expect a bounce with here the very big 61.8 together, which is the yearly ABC up together with the 50% of that. So we have all the level down there for a long period of time. If we look, for example, the bottom of this one is at 105, and then we are here, we have the top here at 103.080 and the bottom at 101.80. So if we look there, 103.80, that would be in this area, a little bit under this bottom, but that's potentially bringing us in the same area that I just mentioned on that fib, which is here, okay? So this ABC weekly is important to keep an eye on because we are using it right now inside the price action, even if those ones are stronger because they are longer time frame, but they are less precise than the shorter time frame like usually. And then we would have here on the top here, we would have the 1 to 72 extension of the monthly ABC up. So you have everything on this chart and on that one concerning the Dixie. If we look at the Euro USD, well, it's very simple. We have exactly the same thing. We have the yearly ABC down that we have there. I don't like it so much because of this green candle in the middle of it, but I have and we have to keep an eye on it anyway. So that's one of the version. And the second version, the second version is the ABC, the monthly ABC down, which is that one that has been very accurate with the 61.8 here, 61.8 again here, where we bounced from, and then we came back to break through it. Concerning the quarterly and the monthly close on the V1, V1 is the first scenario, V2 is the second scenario, but you will see there is a lot of confluence in between there. So what can we look here? We can see we had a close. Okay. So we had a close. If we look on a clean chart like this, we had a close right above the 78.60 fib of that ABC down. So the most important of those ABC is the 61.8 and the 100% extension. Normally, if we would not be in last quarter of the year with the channel on the Dixie and everything I just said, we would look automatically for this 100% extension here at 0.9025. That would be the regular thing to look at after the break and the close, quarterly, monthly close under this 61.8. But due to what I just showed on the Dixie, I think it is still important to keep in mind we can just bounce from here after struggling around it, of course. We can bounce, struggle a little bit, and then start to bounce, and that would be correlating with the data, the financial data and economical data that would come from the USA with recession coming, with some bad data we have already seen about the consumer confidence, about some PMIs, if I remember well, everything, which is what I had said since the beginning. I said the path of hiking is very fast in the US. They did it because they had a very strong economy. That's true, but I think the damage is already done on the economy. The loan went up, the companies are reducing the investment or postponing all the investment, and that will soon have an impact on the unemployment too. So the growth is slowing down, and the consumer confidence due to the inflation, which is not reducing at all yet, really, well, that's creating a lack of confidence, and that's what we saw in the last reading. We are still in very low reading on the consumer confidence, and the consumer spending is around 65% of the US GDP, so it's the biggest in the world percentage of the GDP. So as soon as the consumer confidence is down, the GDP is very vulnerable in US. So that's why all that plus the Dixie that we just saw would let us think this scenario is the most valid for now. On the other side, if we would break, we would go to this 90-24 area. If we look at the same scenario at the same fib extension on the no, I don't want. Okay, if we look at the same at the second scenario here, so we look at the weekly close and the monthly close, and we see on the regular candles, of course, we see we close above the 50%. So that's nothing very important, but due to the fact, if we would keep on with the same theory of those ABC that are very reliable, if due to the fact we broke close under the 38.2 on a quarterly basis, and clearly, very clearly, we would look for the 61.8. In that case, it's 0.9048. So you see the correlation we have there on the target in case the scenario of the bounce here would not be validated, then we would look at 0.9040 here, and there with the one-to-one at 0.9024. So you see they are both exactly at the same place, which means whatever happens, if we break lower for any reason, which is not likely to me right now, but still possible technically, then we would have a huge, very, very, very strong level at 90.24, 90.40, which is the same thing more or less here with the 61.8, and on the other one with a 100% extension. But I still think we can not see this scenario, and we can stay bouncing from here, which is what I'm looking at, and that's why I am taking some longs Euro USD as soon as I can. I took another one this morning here. I took another one that I posted on time. This one I could not post it, but this one I posted it. I took another one. So if we go a little bit inside this zoomed chart, we go from a yearly and quarterly to a 15 minutes, so it's very different. But we are still in the same thing, looking for the upside for now. And we will have the next big challenge will be the break of this daily 2021 moving average. So let's have a look on the dynamic indicator chart that I have here. This is the daily, this one is the daily 2021 moving average. So this one has not been challenged since, let's say, we will look at it clearly here, but it has not been challenged recently. It was challenged a little bit here. We broke through it and came back inside it. That's inside the war thing, and we had that big ABC down. But that will be the first challenge of it after a long time. Even here, we didn't touch it really. So that's, let me think that we will not be able to break it at the first time. We will need to touch it, come back, touch it probably a second time, and break it on the third time, which is usually what happens, the second or the third time. So that's why here it can be a short scalp entry, which is what I'm looking at. I want to have, of course, a nice short setup here. And we have there a big 76.40 fib, which is a sister fib of that 78.6, which is those big ABCs I just show here. So you have the 76.40, 78.6. So you see this is this big fib that we would touch there. So it's important. Of course, it's not as precise as the other one because it's a very long time frame fib, but we have there at the same time a confluence with some pivot. We have the daily, if I'm not wrong, the daily S1. It's a small one, but that's creating a confluence. Here we have a yearly volume support, and we have here monthly, very important support with the quarterly order block there. So all this area will for sure create a pullback on the Euro USD, unless like Lagarde would say we will hike 200 points next week or whatever. But in normal environment, without a special headline, we should look at this area by double topping this thing or even pushing a little bit higher, which would take the stops of the people who are still short from there. Then after touching the 1 to 100% extension here. So this is really the first area. And if we would spike above it, which happens sometime, and then come back after it, we have the second level here where we have the same thing, a monthly support with a quarterly order block, monthly support, and the 38.2 fib, which is a very important fib we have there. So this is the two area we are looking at for a real good short scalp on the Euro USD if we can look at it. So that's what we have for now. Concerning gold, for the one who are trading gold, so we are in this area. I had mentioned this area. That's where we bounced from last week. Now, logically, if we respect the Dixie story, then we would finally break back above that 116.85 level that I called in 2021, and which has been the bottom, a multiple bottom here. I called it in 2020. You can find that in my tweets. So this level is very important. If we look, same thing here on a quarterly base, and that's not good for gold, we closed above under this level. So we close under it, which is normally calling for the 2360. As soon as we close under the 38.2, we call for a retest of this one at 1,440, which is still possible unless it would be on a yearly base. If we go up again, it would be a phase break under it, and then we will go up. For that, we would need risk to be risk off strongly and the USD to go down at the same time. The risk off, I think, will happen because of the recession which is coming and which will probably make more downside on the S&P and on the stocks. That's what I'm expecting. But concerning gold, then to go a little bit inside here, now that we explained the importance of that 1685 level here, we bounced some. We are in this area, so we could still expect that this thing, even if we had a quarterly close under this very important fib, that could be on a yearly base, a phase break, just a spike under it. So gold is quite easy to trade with the level. You see how those levels has been working quite nicely. If we go a little bit deeper, then you have there all the important level. I don't know why. Okay. So because I am on a very short time frame, so you have here on this chart the most important level that we will see if we go lower for a bounce. And of course, I am buying the dips on the dips too on the gold. So if you have, I will stop the recording now, and we will do another update tomorrow like usually.